Hello, and a warm welcome to Ecolomondo's first webinar of 2025. In this webinar, we will delve into significant breakthroughs Ecolomondo's team has achieved and explore the path forward. I am Moneer Barazi, your host for today. It's an honor for us at Global One Media to collaborate with Ecolomondo and its executive chairman, Mr. Eliot Sorella, on this highly anticipated event. As many of you know, Ecolomondo stands as a prominent Canadian clean tech firm, renowned for its innovative approach to recycling hydrocarbon waste, particularly end-of-life tires, into valuable commodities. With over 2.5 decades of industry experience, Ecolomondo has emerged as a trailblazer in the circular economy, dedicated to minimizing environmental impact while promoting sustainability. It is publicly traded on the TSX Venture Exchange as ECM and on the OTCQB as ECLMF. Before we start, a short risk disclaimer is in order. Kindly note that this event will contain forward-looking statements from Ecolomondo, and that Global One Media is not a registered broker, dealer, or investment advisor, therefore serving only as a host to this event. As always, this webinar is being recorded and will be made available later for viewing on both Ecolomondo's website and Global One Media's YouTube channel. The links are provided in the chat box for your convenience. Moreover, recordings of Ecolomondo's previous webinars can be accessed on those same websites, offering insights into the company's progress. The session should not be a one-way communication. We hope it will be a smart and collaborative conversation that involves inputs from attendees. Please feel free to leave your questions and comments in the chat box. We will do our best to cover as many of them as time allows. Now, I would like to welcome Mr. Eliot Sorella and Jean-François Labbé. Gentlemen, welcome.
Thank you, Moneer. It's always a pleasure to have the opportunity to explain more about Ecolomondo and talk to our investors and our stakeholders. We at Ecolomondo are going through a time of, it's a turning point for us. We feel that our forward path is going to be quite aggressive and it's going to be successful. So I look forward to getting your questions, and I look forward to getting the questions of our investors.
We are very excited for this event. As you mentioned, your team has been working hard and achieving very significant breakthroughs. Ecolomondo has achieved many important milestones when it comes to the Hawkesbury facility. It achieved simultaneous processing in both reactors in full automatic mode, enhancing operational efficiency. And recently, you have completed the installation of the new milling line. Can you provide more details about this very important milestone?
So, in our process, we have to look at, there's different parts to it, and each part has to work in tandem with the other. That's the only way that it can succeed. So, we started building this plant in 2019. It's been a little bit of a challenge, and not only because of the technological part, but also because we were faced early on with the pandemic, with all the problems that came along with it. Today, we've overcome a lot of these problems, and the technical part, the TDP, the shredding, the carbon black, okay, we feel that we have it under control, and the last part of the puzzle really was the carbon black line. Unfortunately, we had purchased carbon black machinery that was off the shelf that was supposed to work. And when the time came that we had to put it into service, we couldn't get the deliverables that were needed. So today, we're there. The line is installed. We're commissioning. We're fine-tuning. And we hope to have the milling line up and operational quite soon.
And you've mentioned overcoming many hurdles and challenges. Can you shed light on how overcoming those challenges impacts the production capacity at the facility?
So if you look at it, as I mentioned earlier, our technology, there's different departments. Each department has to work in tandem with each other. You can't, if you shred tires and you don't process them, you can only shred a limited amount of tires because your operating authorities will not allow you to stockpile just rubber. So the shredding line has to work. Then the TDP, you have to process the TDP. So once after we complete a batch, we normally have about 40% of the rubber crumb that we put into the reactors as carbon black. So that part now has to be processed. You can't stockpile an unlimited amount of carbon black. So you need the carbon black processing. So once you have all three processes working, all three lines working in tandem, then you can shred or you can process rubber as much as you want, provided that it's up to the limit of capacity of the plant. So that's where we've been striving for over these years. And Jean-François Labbé, who's the interim CEO, he will give you the opportunity to explain a little bit the process so everybody understands what needs to be done to have a successful rollout in production and ramp up.
Okay, so I'll try to get into the details of each of those steps that you see on the slide. Basically, for number one, tire shredding, let me focus on that for the next 2 minutes, 2 or 3 minutes. We shred tires because of many reasons. The most important is that it produces the best value for the end products. We can also process with our technology many other residuals like plastics and other materials, but the tires produce a carbon black that is highly valued on the market. That's why we focus on the scrap tires, or depending on the region you're in, end of life tires. These mean the same thing. So basically, governments in the 80s and 90s, because of large tire fires in landfills, they instigated a lot of regulation and fees to ensure the proper recovering of tires. In fact, what they wanted to do was to avoid the landfilling of tires near cities, because or anywhere for that matter, because it creates a dangerous hazard for the environment. So basically, there's a network of scrap tires for collection and proper disposal, and that procures us a tipping fee. So we are, that's the beauty also of this model, we are paid for our feedstock. It varies on the region. If we build a plant in Europe, the tipping fees are higher, but throughout Canada and the US, they're about the same amount. And in some areas, it's government ruled and managed by the government agency in some provinces. But even in some states, like in Texas, where we anticipate our next project, our next facility, any large seller of new tires, they charge you an extra fee for disposing of your scrap tires. So the system works even if it's a private system. So basically, what happens is we negotiate a contract with a scrap tire provider. They send us the tires when we need them, and the beauty also of this is, even though we're talking about leftovers or garbage, if I may say so, these are clean tires. They come straight from the retailers that just replaced for new tires. So the feedstock is clean, segregated, and ready to process. When we receive them, there's three departments. So the tires are processed in the first department, which you see on the slide as number one. It's fairly simple. It's difficult. It's hard. It's harsh because we are shredding tires that are built to be indestructible. You don't want your tire to get a flat for no reason on the freeway. So we shred them in multiple steps. At every step, we extract the steel. We extract some fiber out of it, and at the end, what we want to collect is the rubber from it. The steel is sold to a steel recycling company. Large multinationals love that steel. If it's clean of rubber, it's a high grade quality steel, and they all want this steel at the end of our process. So at the end of step one, basically tire shredding, what we aim for and what we have actually is a chrome rubber. Many people see chrome rubber all around them in regular life. You have they use it to mold. They put glue with it, and they mold it into different products like speed bumps or steps, carpets for door steps, animal barns. Industrial carpets. All these are made from chrome rubber coming out of these scrap tires. That is today's situation for the recycling of scrap tires. What we do at Ecolomondo is we bring it to light years away from this. We take the chrome rubber and we decompose it back into its original ingredients. So these are the next three steps that we see on the slide. So the first step is fairly simple, but not first, but I will refer to number two on the screen. Reactor loading. We take the chrome rubber. We load 15,000 pounds of chrome rubber into one reactor. We shut it down. We shut it sealed, and we extract the oxygen from it. And then we heat it up under a fully automated process. There's 100 sensors, over 100 sensors that control every step of the reaction, and the heat, the pressures, everything is controlled meticulously, and that allows to maximize the output of the reaction. So while we heat up the reactor, the rubber disintegrates into basically two things. Part of it becomes gas. I'll come back to it in a second. And part of it remains as it looks like ash, but it's not ash. If there were oxygen left in the reactor, it would all burn and it would become ashes only, valueless. But with our controlled reaction, in the absence of oxygen, it gives us carbon black. Carbon black is a large commodity. It's one of the top 10 chemical products in the world. It's used to color the plastics. It's an essential ingredient for any rubber product. So your tires have a carbon black, but also all the seals, the molds, everything around a window, everything that is rubber has carbon black in it. So it's all around us, everywhere in our everyday life, all around the world. So it's very largely used. It's very polluting to produce. Normally, they produce carbon black by burning oil, and they collect the soot from it. That's the carbon black. It looks like the ink you have in your printer that leaves your fingertips black all the time. That looks like carbon black. In fact, it is partially carbon black as well. So at the end of our process for thermal decomposition process, which we refer to as TDP, Eliot mentioned it a few times as TDP. That's proprietary technology of Ecolomondo, and that's where we add a lot of value from it. We start with rubber, and we end up with carbon black that is highly valued, and and the gases that were extracted during the reaction, they become part of it remains as gas, and part of it is condensed into oil. So the oil is sold as oil, and it looks like your regular bunker oil, I may say. And the gas is similar to propane or natural gas. We clean it, and that gas is stored, and it's used to heat the next batch. So basically, it's self-sufficient energy-wise, and we have 2 of those reactors in Hawkesbury. In Shamrock, which is our next project, we plan to have 6. It's the same system multiplied by 3. And that's where we've been struggling for the last year. At the end, we take the carbon black from the reactor, and we process it to, in fact, we mill it, pelletize it, and package it ready to sell to large industrial clients. We had an equipment that did not work. We replaced it, and as we're speaking, we're starting the decommissioning of this line. So that created a bottleneck. It prevented us from operating the whole plant because at the end there was a major bottleneck. Now we're ready to go, and I'll let Eliot go on.
So basically, our technology is extremely innovative. We're the first of its kind globally. The way we do it is we're in the pyrolysis industry, but our technology is a little bit more advanced. There's many features that we have that other companies do not have. For example, we extract the water during our process, and we reuse and recycle it. Because what you put into a reactor, if you don't take it out of the reactor, it'll end up in the product. So if we don't take the water out, it'll end up either in the gas or the oil. So we have many features. We have to keep in mind that it's first of its kind, and Ecolomondo, because of its technology, we are the front runner on a global scale when it comes to technology, but we are the only company that has a true entrance into the North American market.
Thank you to both of you for explaining the process in detail and highlighting all of the positive economic aspects. I can see that you're able to extract value not just from the rubber, but also steel and other areas. So the operational efficiency is really impressive. So now that ECM has begun commissioning the system, what are the next steps? What does your ramp-up path look like from here onwards?
So we... over the last year or so, we have been generating revenues. We just reported some revenues. We expect in the month of April will be our first, our biggest month, and we're into the commissioning of the carbon black. And once the carbon black is commissioned, everything that we have at that plant, we produce at that plant, is pre-sold. We have off-takers for everything at prices that we projected. So as we're able to pelletize, get the pellet size, the particle size, and pelletize it, we'll be able to ramp up our production fairly fast. And that's where we're headed at this point. We have the shredding line is capable to produce almost the throughput that we need to operate at full capacity. Our reactors are doing double batches, so it means that every 8 hours, 10 hours, we're processing 30,000 pounds of tires. Now, 30,000 pounds of tires of rubber crumb, okay, is the equivalent of about, okay, give or take about 4,000 tires per shift. So you can see the numbers will go up, and so it means that we'll have a tanker load at full capacity, obviously, or 80% capacity. We'll have a full tanker load of oil every day and a half. We're going to have a full truckload of carbon black about in the same time. We're going to be generating more steel, more tipping fees. So you can see the numbers, the way it works. So we're in our ramp up rate now. We hope that I don't have all the numbers for April, but I think that April will be close to, if we haven't achieved okay, a 6-digit sales number. So we're doing it. We're selling products. We're getting the tipping fees. We're selling the steel. We're selling the oil. We just had one part of the process not happening, which we suffered the consequences. But we're getting out of the woods now, and we're very, very confident that we will achieve the numbers that we've projected for years.
All right, and to get to those projected numbers, you're already at 80% capacity, and hopefully you'll be at 100% soon. So there must be some marketing efforts along the line. Can you tell us more about your efforts to increase your offtake and your customer base?
So I want to correct one thing, Moneer, is that we're not at 80% capacity, okay? 80% capacity of that plant is virtually 100% for us. So we're probably operating today at perhaps 10% capacity. So if we're able to generate almost $100,000 sales at 10%, then you can do the math as to where we could be when we're operating at full capacity. So we feel that where we're going, we're in a good spot right now, and all we need to do is to get this carbon black line running. Once that happens, we turn the page, move on, and we'll be able to produce. We have the technology. We have all of our employees are trained. There's over 30 people working in Hawkesbury. We still have a few more to hire as we ramp up to full capacity. People are getting trained. So we have all the ingredients for success. And we're there. You know, Moneer, we're a startup, okay, a new technology. I mean, there's even though we tried to de-risk as much as possible with our pilot plant in Contrecoeur, okay, there's always uncertainties. But the key is not the uncertainty. The key is to overcome the uncertainty. And I have to say that at Ecolomondo, in spite of all the challenges, we've always been steadfast to the cause. I've been there supporting the company all along because I believe in it. It's a company that serves purpose, not only to make profit, but it serves purpose for our society. And once, you know, there's 2.7 billion tires being manufactured every year. Carbon black is one of the most pollutant chemicals to produce. So you can understand what Ecolomondo brings to the table. Profits for shareholders, okay, but a cleaner environment for our society.
Thank you. And I want to talk a little about the financials. Ecolomondo has just signed a new agreement with regards to the terms of the loan of agreement from Export Development Canada. Can you explain more and the consequences for the company?
So our bankers have been supportive all along. They understand very clearly the need for our type of technology. You know, Canada, United States have been extremely lagging in the pyrolysis industry compared to Europe, where they have been very, very aggressive. So we noticed, you know, our advisors to tell us, we talked to the shareholders. You know, I'm one, I take every phone call. Any shareholder that calls me, I take their call and I listen to what they say. And we felt that over the years, because of longevity, because of delays, because of, in spite of the successes we've had, okay, we weren't able to tell them, hey, it's running and we're generating revenues. Okay, so we noticed that there was some issues, uncertainty that was created, and the investors noticed that. So we approached our bankers and we said, look, we want to give more confidence to the shareholders. And they feel the debt is high. Mind you, the only debt that Ecolomondo has is to build that plant. It has no other debt. Okay, we went public and we had no debt. Okay, and I've been steadfast to making sure that this ship, okay, has steered clear of very turbulent waters when it comes to debt. We've raised little money and we built a huge plant. It's a huge undertaking. In spite of the cost of what it is, if you had to build that plant today, you can multiply it by 1.5 times easily. Okay, so our bankers understood, and they gave us a break. Okay, so we now got a reprieve of 2 years on our larger debt on capital and interest payments, and we have 2 smaller loans that we got a reprieve up to January 2026. That has done wonders for our stock. It has given confidence back to the investors, and we see it, and our investors are telling us about it. So the only thing that we need to do now is concentrate on that carbon black line. And as I said, we're in the midst of it right now. So what we've announced are factual. We've achieved those thresholds. We have already achieved the capacity. We've achieved more than the capacity than what we need. So we're at the particle size. We bought a particle size analyzer. So that means that every single batch that we do, every bag of carbon black, will be able to monitor the particle size in-house, whereas before we had to send it out to a lab. So the loan, the postponements, payments, etc., these are major milestones for the company because it gives investors back the confidence that the company deserves.
And it puts you in a better financial position overall to focus more on carbon black, as you said. And you have been achieving a lot in that area. The Hawkesbury TDP facility received the International Sustainability and Carbon Certification, the ISCC, back in July 2023, ensuring traceability and sustainability of its recycled products. What does this mean for Ecolomondo and its vision as a leader when it comes to ESG?
Have always looked at that. We've always looked at the social aspect. Okay, we obviously look at the financial aspect, but it's meant a lot. The ISCC certification means that every product that we manufacture is sustainable. It means it's manufactured in a manner that's green. So anybody that's looking for a carbon neutral footprint, okay, will endorse or purchase our products. Okay, so it has gone very, very far for us, and like our oil is considered a sustainable product. So it doesn't fall within the threshold of just being simple fuel. Our oil is sold as a chemical and not as fuel, which brings to the company added value and a much higher price, okay, than conventional bunker. So these are all milestones that we've achieved over the years. It's not only the making the machines run. It's the machines are machines, okay? But it's making sure that you're making quality products, that you fulfill the social aspect of it. These are all aspects that we, over the years, have considered at a considerable cost. For example, we monitor emissions in real time. We don't store any tires outside. The trucks are unloaded and the tires shredded in real time as we unload. I mean, I can go on and on and on as to what we've done. So and we're doing, and we're achieving. So this is very, very clear that we at Ecolomondo are doing things out of the box, and we've set the threshold for recycling in the future, and we're setting the trends. You know, we have a lot of people, industry peers that come to us, and they want to visit our plant. They want to see how we do things, how we monitor our emissions, how we're shredding the tire, what size the rubber crumb, how do we remove the water? Because the key thing in this industry, okay, is making quality products, quality and consistent. So we've achieved those thresholds.
Quality and consistency. These are important characteristics. When I described the process earlier, I referred to our fully automated process. We carefully monitor every aspect of the reaction. That allows a consistent quality of the end products, of the oil, of the gas, of the carbon black. The beauty of this is that, our clients are all our end products are large commodities sold to large multinationals. So basically, they have specific manufacturing processes, and they love a consistent quality. They cannot afford to have something that is excellent on day one and variable on day 2, 3, and then excellent on day 4. They rather have something a bit lower quality, but always consistent. That's how they process their products. So the beauty of our products is that they are consistent quality. And also we extract, thanks to that, and thanks to the automation that Eliot invested heavily in during the development of the technology, it ensures consistent quality, high quality, and a high percentage of carbon black at the end of our process. Carbon black is the highest value of these products, and the more carbon black we have, the better value of our manufacturing. And in fact, we extract a lot more than the few other companies that have developed similar technologies. So we, for the same process, same cost, same production cost, same number of employees, we add a lot more value when we have higher percentage of carbon black.
Absolutely. And as I was saying, Ecolomondo has a very impressive scorecard when it comes to environmental sustainability. I want to go back to the financials a bit. And this is my last question before we move on to the questions from the audience. I noticed recently that ECM's stock price has nearly doubled in value, and you're also in the process of doing a raise. How do you expect the recent breakthroughs and this raise to impact shareholders moving forward?
Well, if you look at the stock price, the recent increase in stock price, it's actually taking hold, keeping into consideration that Ecolomondo's stock was much higher. We, as a startup, have suffered the effects that many startups have been faced with. The difference between Ecolomondo and all the other startups is that we actually have a physical plant that's built and has been almost been fully de-risked at this point. Not yet. We're still working on the final steps of it or stages of it. But the investor has noticed the postponement of debt payments has had a major factor in it. And I believe the overall sentiment of the investor, taken into consideration the years of information that we've given, our stock has achieves its value based on reality. When the reality was low, the stock suffered. When the realities is of success or possible success increases, the stock price will go up. My job is to make sure that it keeps going up. And that's the way we look at it. We don't want to oversell because we don't want the stock prices to increase and then go back down. We've already had that. We want stock prices to increase on a gradual basis and all to the benefits of the stakeholders. And Moneer, we cannot lose focus on one thing, okay? And the only way our technology, our company, or any company that's in this space, because processing waste is new when you sit down and you really look at it, okay? It's been at most 15 to 20 years, okay? So it's still gathering momentum. Ecolomondo's there to take advantage, where our competitors, okay, when our competitors are just getting into it, they're just starting to build their plants. Yes, you have third world countries that are doing some sort of pyrolysis, whatever, but they're not doing it with the social part, okay, making sure safety is there, making sure that it's green and you're not creating other pollution. Okay, so this all has a cost to it. So we at Ecolomondo, where we see our future is getting Ecolomondo Hawkesbury up and running, break ground in Hawkesbury in Texas. We're ready to go. And we've already selected other sites. We have a partner in Spain that's reviewing, for a 4-reactor plant there. And we're talking to other parties to build other plants. But it all starts with Hawkesbury. And that's what we've been focused on. And if you look, we have, as a company, we have not raised in the tens of millions of dollars. We've raised only what we needed. Our shareholders have been just a little diluted. I've stayed steadfast to the cause. I've supported the company heavily because I believe in it. I don't only believe in the financial part of it, but I also believe in the social part. So our future is very, very bright. And hopefully, in a very, very short period of time, I'll be able to prove it to everybody.
Competition is a big word in our environment. There's only a handful of companies we're talking about 3 or so in Europe and 3 or so in America that are advanced in terms of technology, capable of recovering materials like we do. So even if each of us had 10, 20 plants, we would still be a drop in the water compared to the oil production, carbon black production, steel production. So it's a big word. Of course, we have to look at what's going on in our industry, but it's not really competitors. However, where I think that's helpful to look at is the output that they advertise on their websites or that we know of them, because there's conventions and we meet and we see what's going on. And I was talking earlier about the high percentage of carbon black that we recover. Ecolomondo attained approximately 40% from the rubber into carbon black. It's a high percentage. Some of the others advertise that they do 20, 22, 23. I think the highest is 28%. The difference between 28% and 40% is purely profits, because again, it's the highest value of the end products. If you produce less carbon black and more oil or more gas, you don't extract as much value. So the higher percentage proves to us that we have a technology above the competition. And again, it's a big word. Another thing that we see from looking at competition is that some of them don't even reuse the gas that they collect from it. So that they cannot process it, they cannot, so they flare it. In other words, they burn it and They don't create pollution, but that's a percentage of the material that they lose in the process. We recover almost all the gas that is produced, and we scrub it, we clean it, and we reuse it in our process. That's a huge cost saving for us. You know, the whole process is about heating and decomposing the rubber, and our energy source is free. It comes from the reaction.
How many industries do you know where the feedstock you use to make your product, they pay you for it? So we get paid to process these tires. And that's why our EBITDA is rather high, because we have no material cost. We have no feedstock cost. Feedstock is revenue for us. And in North America, almost every state, every province, whether regulated or not, has a tipping fee. So the profitability of these plants are very high because there's no cost for its raw materials.
It's certainly an advantage to be paid for inputs rather than pay for them. And you're clearly generating a lot of value on both ends, the inputs and the outputs, as Jean-François highlighted.
Well, basically, I mean, we've already discussed it, that the stock is on an uptick right now. And we're happy for it. I think it's been long in coming. As you can all see, I'm still the majority shareholder of the company, and because I've been supporting the company for years, so at least since 2008. So I think everybody that's on the call knows the stock price. So Moneer, we can move on with the questions.
Thank you. One question asks, at what time do you expect to be at full capacity once all is up and running?
We expect that by year end, we will be very close to it.
And another question, you're currently at 10% capacity. How many batches per week are currently being made?
Well, it depends on how much carbon black we can store. So right now we have a lot of carbon black on site to be processed when the milling line is running. So this week we're going to be making, we're planning for 10 batches, 2 batches per day simultaneously. More so to train our operators. So that's, and again, what we're operating at 10% in terms of sales, but we're operating in terms of productivity, we're probably much higher than that.
You see, what happens is we when we shred the tires, we extract the steel that's sold right away, immediately. And when we process too many batches of from from rubber extracted from the tires, what happens is that we have the gas, that's okay. We have the oil, it sells out. As Eliot was saying, we have regular shipments of tanker oil tankers. But the problem is we accumulate a lot of carbon black and we cannot process it because of the bottleneck created at the end of our plant. So we could not produce to capacity, even though we have settled almost all of those little problems through those steps. We are stuck at the end with too much carbon black that we cannot process yet. So now that we are beginning the commission of it, of course, it will ramp up and we have accumulated carbon black to process.
Moneer, 10% is not the issue. The issue is that our process works. We're producing regularly. Okay? We're shredding the tires. We're getting the tipping fees. We're selling the steel. We're selling the oil. As soon as we have a container of steel, it's shipped. Okay. As soon as we have a tanker load of oil, it's shipped. It hasn't been 1 week. It's been for the last year and a half. So today 10% is, we've proven what we're capable of doing. Okay, we're just fine tuning now and getting that carbon black line up and running.
Exactly. You validated the process, and now there's the ramp up process as well. Another question is the only issue holding Ecolomondo back from achieving full production the commissioning of the newly installed milling equipment, or are there other issues as well?
I'm not aware of any showstoppers other than the milling line at this point. Okay, so our carbon black, yes, there's repairs, there's maintenance, there's your general stuff that a plant our size. I mean, people, a lot of investors haven't visited the plant, but anybody that visited the plant sees the enormity of the project. And keep in mind, everything is done fully automated. So there's a lot of maintenance to be done, etc. But it's regular maintenance, and we allot the time for it. So a machine is like a car. When you use your car all the time, it runs well. If you park it in your garage for 3 months, there's a little problem that crops up no matter what. So when we're using those machines, they're working like clocks.
Another question is, do you expect to expand or sell the technology to other sites or countries like Shamrock and the recent agreement with the Spanish CIE?
Well, our technology right now, we've kept it very secretive. Okay. My focus has been on the Hawkesbury plant, because that's where it starts. There's no sense starting to build a second plant when you haven't debugged 100% the first one. So we want to profit from our mistakes in the past. As a company, we made mistakes, but engineering companies, keep in mind, first of its kind. Even the engineers that were working for the engineering company, they didn't understand. That was all new to them, So now we've debugged all of this, and the way we've structured our engineering, okay, and how we built our plants, and the way we're going to build these plants, it's in modular. So we have a Hawkesbury that's a 2-reactor plant. We want to build Texas 3 times the size. We only build 3 modules. We don't have to re-engineer. We don't have to, to debug again. We don't have to. We've learned it. We're ready. We're ready for it. So once Hawkesbury is up and running, we will focus on Texas. I can assure you, okay, we're ready to go on that. Okay, from selecting the engineering company, we have the site, we have the infrastructures in. I mean, we're just ready to go. So my focus has been on that. Selling the technology is not in my cards right now, because the way I see the company and where I want to bring the company, okay, is that the money is not in building the equipment and building the plants. The money is in operating, okay, in these plants, controlling vast quantities of resources, okay, and getting a higher price, and even at some stage to eventually further process. For example, the oil, we can go into jet fuel, we can start using manufacturing hydrogen, we can make electricity. There's so many, look, there's so many things that you could do, but we have to start someplace, and we're starting at Hawkesbury.
You got to realize that these products are in strong demand because they are part of industries that don't have alternative sources of clean products or green products. So they desperately need it. The investors, the shareholders, the stakeholders, the governments, the clients, they're all asking those companies to get cleaner sources of materials. And our products are one of the few that they can get. So demand is very strong, and they're patiently waiting for our extra production.
And is there any update on the joint venture with Aerosol in Spain?
Well, the only thing that we can actually tell you, we're in negotiations with them ongoing as early as today. They expect to visit the plant in May. So the discussions are getting into an area that's a little bit more definitive, but we're not there yet. So we're making headway. These kind of projects, you're looking at a lot of money. So you're looking at how you need the feedstock, you need the off takers, you need the permitting, you need the land, you need the investment. These are all things that take a long time. And keep in mind, we've done all of that in Hawkesbury. We've done all of that in Texas. We have the feedstock in Texas. We have the off takers. We have everything that we can. Okay. The only thing is we want to make sure that we've debugged. We don't want to suffer other issues in Texas. We want to do it all for in Hawkesbury. So what we've done in Hawkesbury, I mean, if you sit down and you look at it, our achievements, okay, are astronomical. I mean, I sometimes sit down and I'm thinking about it, and I say to myself, my God, I mean, I'm proud. I'm a small businessman. I'm proud to be even part of it, and all our shareholders, most of them haven't sold their stock. Some people manipulate the stock because it takes small quantity to manipulate, which the company has suffered, but we've stayed steadfast to building a company, and because we believe if you'll build a great company with great value, if you have the product that the people want.
I have a few more questions and I want to move through them really fast just to manage to cover most of them. Canada is a country that has more natural resources such as natural gas and oil. So who is the focus customer for pyrolysis oil?
Right now, we can actually sell our oil to Canada. Okay, in the tar sands, our oils are well in demand. Because the viscosity it's very fluid. So companies that they put the tar sands oil into pipelines, it doesn't flow that well. So they're looking to, they would use our oil to improve the viscosity and the fluidity of what's in the pipeline. Unfortunately, at this junction, we don't have enough. One tanker load every week means nothing. When we're going to have, we're going to have Texas, we're actually looking at a plant right now. We already have the investor for Calgary or Saskatoon, and they'll take the oil and put it into and sell it to locally because, for the tar sands, because the cost of the freight to ship all the way to Alberta from Montreal is from Hawkesbury. It's quite costly. But in Texas, in the states where we're shipping our oil now, the client subsidizes most of the transport.
And what country do you see as being the biggest market for future plants?
United States.
After we advertised that we were planning our next project in Shamrock, we had many calls and many discussions for many other states. So the possibility is huge.
Can you tell us more about the timeline for the Shamrock plants? The Shamrock plant, once we break ground, it'll take about 2 years, and we have a firm commitment from an EPC contractor. So that's the timeline that they've committed to and will bond for.
And I think you've answered this, at least in part. How do you compete when it comes to prices?
Yes, of course, our carbon black is cheaper than virgin carbon black. Companies are looking for it because it's a cheaper cost for it, but they want good quality. So look, our client told us, Eliot, your particle size is too large for us. So and our commitment to them was a 15 micron particle size, and we were giving them 35 to 50. Right now, we have our particle size down to about 20 microns, D97. That means 97% of the particles that we have. I mean, we're not shipping this product. We're still in the tweaking part, but we're at 20, whereas we were at 50 and 60 and 65 at some points.
Eventually, we can expect that eventually there will be a green premium to our products, like in the food industry, where your bio products are more expensive than the non-bio. We have a green value to our products in polluting industries. So eventually, we can expect there will be a green premium, but we're not there yet.
And is all of your carbon black produced already sold? And if not, what percentage of it is sold?
Right now, as everybody knows, about 2.5 years ago, we announced all of our carbon black sold, and we had a $7 million a year contract for the carbon black. So we still have the same client at the table, and he has given us assurance that he's capable of buying everything that we produce.
We could sell a lot more than what we are capable of producing. The demand is very strong.
Thank you for that. Unfortunately, that is all we have time for today. Thanks to everyone who took the time to be with us. Should there be any more questions we didn't get to, please feel free to explore Ecolomondo's interactive investor page for more information. You'll find the link in the chat box in a second. I would also like to remind you that this webinar has been recorded. The recording will be accessible for future viewing on both Ecolomondo's and Global One Media's YouTube channels shortly after today's event. Please keep an eye out for upcoming webinars to stay informed about the latest developments at Ecolomondo. Thank you again, and we wish you a pleasant evening forward.